So Saran, let's bring you in here and the trends that we can extrapolate from the East African voice and the West African voice. World Bank saying that private-public partnerships are definitely one of the better models when it comes to financing long-term infrastructure deals. Minister Cisse has mentioned the Azito 3 power project in Cote d'Ivoire, and we're going to go into that in a little more detail as a case study, but perhaps just if you can weigh in from an IFC perspective on sustainable trends. It's interesting whether you can deploy the same trends across regions, across countries, or in some instances, has it got to be specifically crafted for each deal?
Thank you. Before maybe addressing your question directly, I think it's very important that I pick up on a couple of things that both Minister Gattet and Minister Cisse mentioned. And that is about the environment. Creating an environment where you attract the private sector, where you create a level playing field, is extremely important. So obviously it's not by chance that both Rwanda and Cote d'Ivoire are attracting private sector investment because they have put in place reform, structural reform, opened up sectors to the private sector that allow that to happen. Otherwise, there is a lot of money, liquidity across the world that is trying to find a home, but they need to be landing in a place where actually the private sector can operate with a level playing field. So having said that, I think you're absolutely right. There are, the financing is different depending on the country, whether they've reformed, they're in process of reform, or have not at all reformed, but as well on the project by project case. We in IFC really focus on trying to bring structured solutions, creative solutions, and financing together in terms of also working with our counterparts in the countries and with the World Bank to make sure that all of the sides come together. And in this context, maybe Minister Cisse has mentioned the Azito project. Azito actually is part of a 20-year engagement of the World Bank Group, and particularly IFC in Cote d'Ivoire, on the back of sector reforms that allowed the private sector to come in. And it led essentially to putting in financing of over $1 billion in that sector, and more than doubling the capacity of the power sector. So it's a good example of a public-private partnership that is absolutely critical in terms of mobilizing financing. But it's also highlight the importance of a power sector in Africa. According to certain estimates, if there were universal power access in Africa, the growth rate that you've just mentioned would be doubled in the future. So the leverage there is absolutely critical. Another example is our partnership with Shannon, with the Bridge Academy. And there again, we're targeting a sector that is absolute driver for the future, as Minister Cisse mentioned, education. And I'll let probably Shannon talk to you more about that area. In addition, we've done fairly creative things in the capital market area of opening it up for domestic private companies, enabling them to borrow locally and then avoiding foreign exchange risk, for example. And one such example is Bridge Bayport financing in Zambia, which allowed a microfinance institution to lift funding from the domestic capital markets and fund small businesses and middle-income people.
So, thanks you very much for that. And you've also touched on lack of access to electricity. The stat out there, according to McKinsey & Co., is that 600 million people in Africa do not have access to electricity, and that's a 2015 report. Electrification, and just having recently been to Abidjan, it struck me when I drove in on the highway in the evening that there are electronic billboards in Abidjan, so that power plant certainly visible to someone who travels the African continent on a regular basis. Saran.
Well, I think maybe I will flip it around a little bit. I think, as I've been saying from the beginning, having the right environment to attract the private sector is the most important. I think money is a commodity, and there is a lot of it that is circulating globally. With lower interest rate environment and even negative interest rate environment, I think Africa would place itself in a very good situation by really capitalizing on that, offering higher returns by attracting private sector to the sector, to its economies. I think that social infrastructure, absolutely, we need to work on that, capital market development as well. But physical infrastructure development trumps it all, because that is the basic foundation on which we can build on
Physical
things.
infrastructure development.
Yes, physical infrastructure development. And I think the role of institutions like IFC is really providing mitigation for a number of risks, both for projects to happen. And attracting institutional investor, I think we can structure around a number of products, creating new asset classes, but the sine qua non has to be that the environment is conducive for private sector to come and play.
Doing business in Africa, you can't afford to be without Africa Investor.